Welcome back, guys. A subscriber requested me that I take a look at First Majestic Silver Corp. Now, this is a mining company, and the thing about mining companies is they're terrible. Basically, I'm going to tell you exactly why I no longer invest in mining companies, and you should have a pretty good understanding of the reasons to avoid them. Now, there's a lot of people in this bullion space with the silver and the gold bugs and the people that think that the financial system's going to collapse and you need to own silver, otherwise you're not going to have any money whatsoever. But I mean, look, it's a commodity and there's a lot of it already out there, all right? The financial system's most likely not going to collapse anytime soon. So, really, all right, the people that peddle this stuff are just trying to sell you on their platforms. So, like I don't know if you've ever heard of them, like Kitco News and like people that um, they have silver dealers and they always advertise for different silver dealers like JM Bullion or yeah, because they make money off the commissions from selling you the stuff or off of like sales charges. So here's the thing, you can't listen to people when they have an ulterior motive. So all right, they might actually believe what they're saying, but they make a lot more money by really peddling a lot of fear. So here's the deal. We're going to take a look at First Majestic Silver Corp right now, and I'm going to show you why their financials are so awful and why I would never invest in this company. All right, here we go. Over the past 5 years, they are up 26%. They have underperformed the S&P 500. They barely pay any dividend. Barely anything for a dividend. And their all-time chart also looks very ugly. It's very cyclical, very typical of mining because they mine commodities, and commodities are cyclical. If the price of a commodity goes up, more people are going to mine it, pushing the price back down. Then you've got a glut of supply, price is down, people stop mining it, then the price goes up. All right, it's cyclical. It's just like that. Okay. Hopefully you understood what I just said there. All right, next. This company is a $2 billion company, pretty large. It's actually, I think they tout themselves as the largest silver producer, but actually, when we dig into their statements, they produce a lot of gold. They actually make most of their money from gold, and they don't really make any money off silver. So let's dive in a little bit. First, we're going to take a look at their financials. And here we go. Their revenue has increased, most likely because of the increase in the gold and silver price. Their revenue has increased. However, their costs have also increased quite a lot. Most likely, they're just trying to mine a lot more out of the ground. Also, you've got inflation costs like labor costs and fuel costs have gone up. Their gross profit is pretty low. Like, this is a pretty terrible profit margin, especially for gross profit. Even with the gold and silver price being high right now. Look at that. Even Q1 2024, they had a negative gross profit margin. That is absolutely awful to see. You never want to see that. And yeah, their operating income, much worse. Pre-tax income. Like, this company is losing so much money, even with the gold and silver price being high. All right. It doesn't make any sense. Okay. Next, we have their shares. So they are diluting shareholders each and every single year. Okay. There is no reason why you should buy this company already based off this information. Unless you think that gold and silver is going to go to the moon because that's what the fear peddlers say. Okay. Balance sheet. The balance sheet is actually good. All right. They have a great balance sheet. They have zero debt almost. All right. They only have $100 million in debt. So super manageable. Their balance sheet is really good. In fact, yeah, their book value is $4.66. So most likely, this company is not going to fall below $4. If they did, then they could liquidate the whole company and probably make money. Just because of like land assets and their trucks and stuff. So don't look for them to go below $4 anytime soon. However, their book value has been decreasing each and every quarter, so that's something to watch out for. In terms of cash flow, yeah, negative cash flow every quarter. It looks like, yeah, makes sense. They issue stock to raise money and they pay a small dividend. So they issue stock and then they pay you a dividend. Wow, it's amazing. Yeah, that's actually not a very good use of capital. I don't know why they do that. Instead, they have to take away this dividend and then they have to stop retiring stock. Like, it doesn't make any sense. It doesn't make any sense. Okay, let's take a look at the stats. Let's look at their return on invested capital. Wow, it's negative. Who would have guessed? Net margin, negative. All right, we just looked at that. let's look at some of their presentation. Okay, one thing that I want to look at, yeah, this. So they have assets in Mexico and basically in Nevada, it looks like. And yeah, their production mostly comes from San Dimas, I guess. Not quite sure which one that is, but oh, San Dimas. Okay, I have no idea what that means, but yeah. Oh yeah, here we go. San Dimas is number 1, so that's right here, this one. And then Santa Ilana makes up another big chunk, which is number 2. So yeah, most of the production is in Mexico. Let's look at this. Okay, here's their costs. So they cut down their labor costs, they cut down their energy costs, their consumables, maintenance. They cut down all their costs basically, probably because they're pulling less material out of the ground. So I'm sure they fired some workers and whatnot. They must have went really hard in 2023 and then realized that was a bad idea. So that's their cost. Yeah, it looks like labor is most of their costs, and then it's materials and then energy. So energy is not that huge of a cost. Really, it's labor. Now we have this. So this is their all-in sustaining costs. Very, very important when you're looking at the cost of mining. The all-in sustaining cost is $21.53 per silver equivalent ounce. So if the price goes below that, they are losing money, absolutely losing money. And this is even with their gold. So this is not pure silver, okay? This is even with their gold ounces in here. Okay. First, let's look at this, okay? Look at the amount of silver they produced. Look at the amount of gold produced. Now look at the silver equivalent ounces produced. Okay, so you take this number, subtract this number from it, 2 million, and you get like 3 million, right? So they basically had 3 million silver equivalent ounces of gold. So they actually produced more gold in a dollar equivalent term than silver. So this is more of a gold mining company than a silver mining company, and it's touted as a giant silver miner. Well, they actually make most of their money from gold, okay? So that's something that I wanted you guys to notice. Also, it's basically the only thing that they do make money on. Here we go. This is what I want to show you. Their silver ounces produced right here, and their gold ounces. Yes, okay. Yeah, so let's compare and contrast San Dimas to La Encantada, all right? We've got 179,000 tons produced and 185,000 tons produced, okay? About the same amount. This one produced a lot more silver and a lot more gold, okay? Like twice as much silver, twice as much gold. So basically, San Dimas has way higher grade deposits. Also, they make way more money off the gold. You can see, well, actually, yeah, and even Santa Ilana. You can see the all-in sustaining cost at these various mines. And look, La Encantada barely produced any gold. Their all-in sustaining cost is $31, so much, much higher than the other two production facilities. Their total cost per ton is lower because they're lower grade deposits, basically. So yeah, they definitely need to focus on gold. They barely make any money on silver. Yeah, the cash cost per silver equivalent ounce. Yeah, because this is all it produces is silver, so really it's $31. And right now, I'm pretty sure silver is below that price. So they're definitely not making any money on this La Encantada mine. Yeah, definitely should probably just shut down that mine. Doesn't make any sense to have it running. Yeah, all right. That was a long-winded thing. Okay. Let's look at, yeah, so obviously it depends on the spot price of gold and silver. And look at that, gold price has been rising, but this company hasn't been doing jack shit. All right? Makes so much sense. No, it's because it's because mining companies are just, they're not well run. And they've just got so many costs, and yeah, like price goes up, price goes down. Usually it's cyclical. They're not well run either. And silver price, it went up a lot here, and it's been basically flat. But yeah, mostly we're depending on this gold price. But if you're just going to depend on gold price, why wouldn't you just buy a gold miner? Like there's better miners out there than First Majestic. Anyway, Let's look at what the analysts think. Analysts believe that, okay, they're going to be negative this year in earnings and positive next year, and their revenue is going to jump by 20%. I don't really know how that's going to happen, but that's what they're thinking. And let's look at the stats here. Look at their short percentage, 6%. Pretty high. That's a red flag. You don't want to buy stuff usually that have a short percentage above 5. So yeah, and they don't even show the percent of float, which is probably higher, like 8% or something. Let's look at the DCF model. And obviously it's going to be really ugly based on the numbers that we just looked at. I just gave them an EPS estimate of 10 cents and revenue estimate of 492 million. That's what the analysts think. Buybacks is 0. In fact, they dilute you. Net debt of 100 million. Discount rate 10% because I want the 10% return on all my stocks. Exit multiple 17 because there's like other stable miners that actually trade for about 17 for their price to earnings ratio. So I'm going to use 17 for this miner. Okay, this is a pretty optimistic scenario. Look at this, growth of 50% in the first year in their earnings. And yeah, their share price of $2.50. Now let's look at the revenue model. I just have their growth at 0%. It depends what the gold and silver price does, but in terms of revenue, I have them at 0%. Now profit margin, they were at like -5% for the past few years, and like -2, they haven't really been making any money, but I gave them a very optimistic scenario where they actually get their profit margin up to 5%, which most likely is never going to happen. Well, okay, it happened 2 years ago or 3 years ago when we had the big gold pump and the silver pump. But 5% is usually not very likely scenario for these miners. And yeah, fair share price of 84 cents. So yeah, definitely avoid the stock. Usually stay away from miners. Their charts look horrible. They just blow their money on mining equipment. They're mining a commodity, which is like literally the most competitive space you can be in because it's a commodity. Like it's all the same. There's no moat whatsoever. So the price is going to go up, price is going to go down. Maybe if you can catch them on a cyclical low, then you could make some money off a stock like this. But yeah, usually avoid them. So yeah, that's what I think. Let me know what you guys think in the comments. And make sure to hit that like button, and I'll see you in the next video.